Yeah, no, I refresh over. Yeah.
Good afternoon, everyone. Welcome to the Inter-American Dialogue. It's a pleasure to have you on a Friday before the holiday. To the leaders of the members, and good afternoon to the audience connected online. We're pleased to have you talk a little bit about a couple of issues relating to international money transfers to Latin America. The past few years have been a very important period for remittances received in Latin America and the Caribbean, insofar as the economic weight that it represents for the country's national economies has become quite significant. For the entire Latin America and the Caribbean, 5% of the gross domestic product of the entire region comes from remittances. And it's a third consecutive year where the economic weight of this flow of money is quite significant. Of course, there are some countries that are more dependent than others. However, the critical mass of the volume is having an impact. And a lot of it is related particularly to intermediation, to the role in which money transfer companies are operating in a significant way in ensuring that money flows seamlessly and impactfully. And so we have been looking at this issue from different angles into the dimension of these flows. And 2024 represents an interesting year for a number of reasons. One is related to dynamics that are taking place in Latin America on the fact of continued migration and the significance that it has on remittances. We were to measure what explains the growth of money, of remittances. It's either increases related to the average amount remitted. If I decide to send a little bit more than I regularly used to send, or by more people. And in the past few years, more than 3/4 of the growth is explained by migration, by new people coming in. This year, it's going to be an interesting one to ponder to what extent this flow of money will continue because of migration and what will it look like. But we also have a few other dynamics taking place. An election year, to what extent elections will have an effect on this reality, and even regulations that are taking place in different parts of the United States, the state of Florida, the state of Arizona, for example, trying to introduce some sort of framework to regulate or tax remittances. But in any case, what we have seen is last year we had 9% growth in remittances. This year, we may see a little bit of growth, not in the same way that we have in 2023, but we wanted to have a conversation among yourselves over these issues, particularly from the scope of the work that your companies have. Where do you see the perspectives of growth taking place in Latin America? We're pleased to have 4 executives from very important money transfer companies. They capture basically together a sizable volume of the market, but at least I would say, conservatively speaking, 50% of the market, perhaps, or close. You can brag over it later. But Paul Dwyer from the Americas, a company that is almost 25 years old, with an interesting business model how it started, and it has grown to basically be among the top 5 money transfer companies in the US to Latin American market. It's a remarkable development, a very interesting experience to tell. We have Alberto Laureano from Dolphin Tech. It's you probably will you're better equipped to tell the story, but it's a company that has evolved over time into a business that offer money transfers, acquired other companies, and now you are venturing into the digital transaction world. And then we have Somalia from Remittances, another company that when they started, the CEO, the 2 co-owners of the company, were a couple of young guys who were doing consulting work for a couple of companies and US government agencies here. And I wish them good luck at the time. And now they're in the top 3 global money transfer companies. So it's just fascinating to see the trajectory and Gerardo Medio. Also from another company that has been in this business for several decades. And each one of you have a wealth of knowledge, experience, data, connections, and clear understanding of where things are heading. So, I wanted to ask just a general question from, what are your expectations that you see in remittances moving forward this year in 2024, and what factors do you think are shaping that trend in particular? I'm just gonna start with Tema.
Oh, sure. Hello, does this work? So I think one of the key factors that we're seeing affecting remittances is the increasing availability of tools like PIX in Brazil. So that's had a very big impact on both the volume of remittances that we're seeing, as well as the way people are sending. The average transaction size is going down because PIX supports, pretty economical, smaller value transactions. And so that's been a pretty significant development that we've been excited to see. And I'm sure many of you are aware, something like 2/3 of Brazilians use PIX. So that's been really fast uptake. So I think a lot of the government actions that are creating these options for people to send money really quickly outside of traditional bank networks is one of the key trends that we're seeing shape our business this year.
Thank you, Paul.
Well, first, thank you very much for having me here. It's great to reconnect with friends and make new friends. Clearly, for our business, which is a brick and mortar walk-in model, the number of people sending is the greatest driver. The economic conditions in the United States, the job market, the level of wages, also a very big driver. We also see a lot of uptake on termination methods that are different from the traditional cash out termination method. We can talk a little bit about how people talk about digital and measure digital. I think there's a bit of a disconnect between some of the statistics that talk about how digital is taking over the world, differentiating between digital origination and digital termination. People have been sending into bank accounts for a long time. That is growing as banking penetration in certain markets grows. PIX has been a great example of a very efficient, very smoothly functioning, government-sponsored, ubiquitous payment network, ability to get to all the banks and to deliver value very efficiently. And I think that point of making each value delivery cheaper on a unit basis will drive averages down. People will send more frequently because they don't need to kind of pull it up and send. So from our perspective, the aggregate number of people sending, and the economic conditions, the job market in the US are the two biggest drivers. Now, we are a US based company. We're just starting origination in Canada, but 100% of our origination today is coming out of the US. So I'm more focused on US economic conditions and migration patterns as the principal driver of my Remitted, which has been extremely successful in starting origination in many different markets outside of the US. Thank you. Alberto?
Thank you, Manuel. I think you probably never heard the name Dolphin Tech, so I'll start with explaining what is Dolphin Tech. Dolphin Tech is a corporate identity. Think of it as a holding company of two very successful, long-standing, with very loyal customer base companies that are coming together. One of them is Barry Financial Group. It's started in Texas, almost 20 years ago. And the other one is Dollar Express, also started 30 years ago. Is sending remittances. So when you hear about Dolphin Tech, this is our attempt to say, Barry Dollars, people ask, where do you work? Well, I work at Barry Dollars. Barry Dollars doesn't do this. So now we all work at Dolphin Tech. And we do have a go-to-market strategy that I think highlights what we see in the industry, Manuel. The first one is multi-channel. So we're one of the few companies that have a meaningful number of company stores operating with company employees. Think of it either as a kiosk inside a supermarket or a standalone location. And I know that may sound passe, but this continues to be one of the main sources of growth and profitability for us for a number of reasons. So company stores is one channel. Second channel is agents, which is the traditional way of looking how the industry has operated. So third-party agents, bodegas, or convenience stores. We have more than 600 company stores. We have over 4,500 agents. And then, of course, the third and most important, but still infant in stage channel, which is digital channel. Digital, we offer browser-based and mobile app remittances for both, Barry and other branded consumers. So the first highlight I will say is customers want to be served in more than one way. We see customers moving almost seamlessly between our stores, and then they go to an agent, and they go digital, they come back. So that will be the first one that I will highlight, and it doesn't beat everybody's business model, but it's beat ours for sure. Second trend will be multi-product. Customers want to go beyond the traditional cross-border need. And that's also one of our main strategies, having more than one service, being able to stay with the immigrant for longer, not only their cross-border needs, but also in their domestic needs as they assimilate and acculturate to the US. You can see that in our company stores where you can do check cashing, for example. We have a very successful check cashing business. That's one key product. People want to do check cashing so they can have a cash in hand and then send their remittance. They want to buy ancillary services, money orders, mobile top-up, bill payments, a number of different things as they assimilate into their US life. And then the most important ones, building credit, for example, offering loans, building credit so they can eventually have a credit history and be able to have a financial life that is more in line with the mainstream of America. That will be the second trend, multi-product. And then the third one, which is just an advantage that we have, is this market is so competitive and it's so specific. The pricing is by channel, by corridor, by principal bracket, by geography. So having multiple brands, it's an act. It helps us really be able to tailor-make the offer more specific to the corridors. We have Dollar brand, Barry brand. We also have again a brand for the Dominican Republic. So that gives us a lot of flexibility in terms of how to tailor-make offers to the market.
Okay, so thanks again for hosting this event, the dialogue. This is, I think, a great opportunity to kind of keep, providing more information, particularly about kind of leaders you have here today. So I think a little bit on Trans Network. I think it's important just to understand Trans Network has been operating. Was founded in 2002. Really started operating virtual transaction in 2004. We are kind of the gateway that provides money transfer operators, clients like we have here on stage, access to a diversified payment network throughout Latin America. So we have a unique position to see both what is happening with the MTOs and kind of the things that they're going through, but also we get to see what's happening in the last mile. And so looking at what we do in the last mile, like I said, we work with financial institutions, retailers, mobile wallets in the region. And what we are seeing is, yes, there's a lot of talk about digital, and Paul touched on this. It's origination digital and payment digital. Banking has been around for a long time, direct deposits, but quite a bit was banks were leaders for a long time collecting cash. Then they lost kind of that leadership position to retailers because retailers were focusing on their customer and providing added services and more convenience to those customers. So what's happening now, what we're seeing a trend is those customers are also changing their needs and are looking for other ways and to collect their funds. And not necessarily means that digital means it's going to a bank account and those funds live in that bank account are being used directly from that bank account. We're seeing those funds going into a digital medium, whether it's an account or a wallet, but particularly in the countries where we operate, they're looking to use those funds, and to use those funds, they need to cash out. So we're seeing there is a trend moving up with direct to bank, but we're seeing that eventually they're converted to cash, and there's still obviously a large concentration of cash in the payouts. So we're seeing that moving forward, looking at what companies, MTOs are doing and what payers are doing is focusing more on kind of that customer experience and customer needs that they have. And those needs can be anywhere from easier way to send the money through all the mediums that are available to them. But on the receiving side is what are those beneficiaries, how are they receiving those funds, and how are they using those funds? So there's a lot of interest now and a focus on improving that customer journey, retailers providing additional services to those customers, giving them debit cards, giving them discounts at the retail locations, providing loyalty programs that we hadn't seen in the past years. So that's something that we're looking at and something that we are also investing in.
Thank you. Thank you. Well, what is are there any game changers that we can think about for this year in terms of the volume of transactions, in terms of the number of senders? Is there something that will make you think that remitting transfers this year will be different or the same as last year?
Well, there are clearly some large atmospheric issues. Immigration has become the political issue of this election cycle, and some of the draconian proposals that are being floated would certainly have an impact on the economy as a whole, including the remittance sector. So that I think it would be disingenuous not to flag that as a general atmospheric issue. The reality is that the U.S. population is aging, and there's a tremendous need for labor, and markets work, and people migrate in part to work, in part to flee difficult conditions, whether they're politically difficult or economically difficult, and that's going to continue to happen. But the politics around that issue are extreme, and I think watching that and hopefully coming to rational conclusions is in the cards. You mentioned one other aspect, which are the taxation proposals, which are bubbling up, and they have been for years. There are always, proposals in one state or another to tax outbound remittances. To date, there's really the only one state that does that, but now there's a slew of proposals. You mentioned Florida, Arizona. Arizona's proposal is draconian. It's a 30% tax. That's confiscatory. That's, that's, I don't think it could ever fly, but I think, people that care about this constituency, people that care about, these families need to be aware of those issues. beyond those very large issues, I think competitive dynamics are they're evolving all the time. Everybody wants to vertically integrate one way or another, and everybody wants to disintermediate somebody, right? So everybody wants to capture more of that value chain one way or another, right? So that's a constant battle that's going on, and it'll continue. I think beyond that, you're not going to have. I don't see any like technological threat. Like we were talking Daniel about Bitcoin, and Bitcoin is a potential way to remit, and that's a non-issue for the remittance market. Without saying anything about Bitcoin generally, it's just as a way to do person to person $450 transfers. It's a non-issue. So I don't really see technological disruption. I think the biggest issues are again political and hopefully rational middle ground on the fundamental issues is going to be able to be found. I think the last thing that the United States wants as a policy matter is what would happen if there were substantial disruptions to remittance flows, because as you correctly pointed out in your introductory remarks, these are extremely important financial flows that, were they to be interrupted, would cause greater instability and greater pressure to immigrate. So it's going to be an interesting year. It's going to be an interesting year, and I think all of us up here are well positioned to navigate it, and it's really helpful to have some of the draconian proposals that are being put out there in the light of day, so that people can take reasonable positions on them.
I'll make a couple of comments to that, Paul. On the immigration front, I think what is interesting, 20 years ago when I was working at Western Union, I remember that there was about 350,000 border crossings a year, and 95% of them were Mexicans. Now you have 4 times that, and less than 10% are Mexicans. So the composition of the immigration flows are very different now than they used to be. So that places challenges on companies like us that we used to serve certain diaspora, and now you have a mix of diasporas. And not only that, but you have a really heavy influx from countries that are under sanctions. So, if you want to send money to Venezuela, good luck. You want to send money to Cuba, good luck. However, those are the groups that are coming through the border the most. And that's also creating new corridors that did not exist before, intra-regional corridors, because not everybody makes it all the way to the US. A lot of them stay in Mexico. So how big can the Mexico-Alba market be now? Nobody's looking at it. So I think that's an interesting point. And then the second point that I'll make is on the digital transformation. I get the feeling that transformation may happen faster on the receiving end than on the sending end. Clearly, direct-to-account transactions are growing much faster than cash transactions. That's across the board in every single country, without us doing really anything. It's all being driven by in-country efforts. But second, the mobile wallets, those are popping up left and right in every single country. So at what point our typical immigrant that used to come from the rural parts of Mexico, Central America, completely uneducated technologically, now will no longer be. They will have a digital solution in their home that once they make it across the border, there's a generational change, and they will be a lot more willing to adopt the digital solution on the sending end than they were, 10 or 20 years ago.
Emma, care to?
Yeah, maybe I'll start with this. From everything I've observed, and I think some of the World Bank data that came out during the time of COVID, the money is going to move. The money is going from here to the immigrant's home country, one way or another. The question is, how is it going? That's really the question. And so when we talk about state remittance taxes, I think, I share the views that have been shared here already. It's not something that we think is really a tenable or a productive policy position. And regardless of election outcomes, we would hope that, it's sort of cooler heads prevail on the policy. But I think the real impact of a policy that imposes the types of taxes that Arizona and Utah and Kansas are thinking about is that remittances that are currently moving through the formal economy, therefore have the protections of the CFPB for the consumer themselves, the protection of AML BSA reviews for preventing financial crimes and terrorism and drug running and all of that. Those protections fall away because those remittances will now move through the informal economy, right? And that's bad for the consumer, it's bad for the recipient, and it's bad for the country. So that, I think that's the shift I would expect to see happen if a tax comes into effect, because that money is moving for necessities, right, in their home countries of origin. So, you know, if I send remittances, I'm not going to say, oh, okay, you know, I'm just going to let my niece not go to school, right? The tax is too high. You know, I'm going to find a way, and that school costs what it costs, right? It's not going to say, oh, well, now taxes in America are very high, we'll drop our tuition. So, I mean, that's the real talk, right? And that multiply that writ large by, you know, grandmas who need groceries and people who need home payment support. And people have come to this country, and that's somewhat country agnostic, largely to create this better life. And so it's really about how do the remittances move is, I think, the question. And then I think policy abroad, I mean, I share the view that I think there's really exciting things happening in other countries where I think governments are taking a position that's very innovation forward and very much shaping the way people in their country can receive and move payments to reduce friction on themselves. I do think that there is more trust moving into immigrants in the United States as well. People are more willing to, we've seen quite a bit of adoption, and our customer acquisition continues to grow in Latin America as well. So that indicates to me that people are starting to become less skeptical of, I think, the trust factor. And our CEO, Matt, talks a lot about this is about trust. It's really hard to trust a machine, and it's much easier to walk into a storefront and see a person in front of you when you're giving them a significant amount of money. And I mean, I think we all respect that, and we understand that trust needs to be there. So I do see some trend towards that trust, people being more open to building that trust with a digital platform than they have been in the past.
Something behind the machine.
Yeah.
So I'll be brief because I think we have really good comments here, but I think just into the practicalities. So we are seeing some shifts, but the reality of moving funds from one country to the other, there's a whole process that goes through, and everybody has their piece to ensure that that is a secure, reliable, efficient, good customer experience journey, right? So but there are kind of new participants. So we mentioned wallets popping up in Latin America. Remittances is not their core business. It's not their focus, but they love the idea that all these funds are coming into the country and they want to capture it. But there are legacy players that have been doing this for 20 years, some even longer. And there are the details that matter, right? So one, the regulatory piece that has to be set within each country. That's moving kind of, I think, in the right direction. But you also have the compliance associated with that. So you may have kind of wallets coming in, new players coming in that are thinking they can kind of make things easier, but not take the responsibilities that everybody in the value chain today is doing. So there's kind of quite a bit of education that needs to happen. That obviously they say we can do this maybe cheaper because they're saying, well, maybe I don't have to do that. They're realizing that they do have to do it. And a company in the US, like the Americas, Remitly, are not going to be able to work with someone that is not, you can check all the boxes that you are comfortable with those funds going there and the beneficiary can use it. So there's still some barriers to kind of move the trend forward even faster. But there are some players that are looking at that. So you have large players in Mexico, large players in Guatemala. Colombia has been kind of, I think, ahead of many others. So I think it's just going to take some time, but it's something very important for all of us to take because we want to have a secure industry. We want to make sure that the information that flows has visibility, that the reporting to the regulators is readily available. And I think everybody's having to look at that and make sure that they do the right investments in the right place to have kind of those platforms readily available and use new technologies to kind of provide that comfort to the whole chain of the industry.
Thank you. I have to say, I'm surprised, impressed that you mentioned, you all agree that there is something on the other side, on the receiving side, technology related. Because from the financial inclusion perspective, it's music to my ears. But from the realistic experience, working on the ground, it's been really difficult to find that pattern to take place. And to some extent, I feel like playing David's advocate. I find it difficult to see that in the short term, recipients will switch into this modality of wallets, for example. And I can give you some illustrations to it. I mean, to get to use of mobile apps in the US by migrants, it took a lot of, not sure if it's experimentation, but trial and error. You started with cards. From cards, you move to variations of store value cards, etc. Then you move to online transactions, web-based platforms. Didn't work. Then, I mean, almost to some extent, the use of the wallet became a ubiquitous, not supply-driven, but demand-driven. And I wonder if on the receiving side, the demand side is truly on the wallet, or if it is just on a bank account that may have the functionality of using it electronically in different ways. But I mean, so far it's less than 5% of most countries, I will say Colombia being the exception, where payments are taking place onto this. So, you know, prove me wrong.
Well, the reality is that the domestic payment system in most Latin American countries works fairly well. And so this isn't a situation such as you had in Kenya prior to M-Pesa, where the domestic payment system was so bad, so broken, so non-existent that a mobile wallet came in and basically took over, right? If you look at how money moves within Mexico, within Colombia, two examples, you know, there were fairly well-developed domestic networks that did the job. So the launch of a wallet didn't immediately take over for that purpose. Now, Colombia has been very successful. The penetration of the wallets launched by the two largest banks has been extreme. In the remittance market, I think what you're going to see is a challenge to the kind of gated communities that the large payers have established for themselves, and the tension between that and publicly operated interbank value transfer networks. So, you know, similar to the ACH in this country, or you know, what Pix has done in Brazil. As more countries generate and develop effective, efficient interbank transfer networks, it's a challenge to the legacy players that have a gated community, a gated network that they want to control access to. And that's a tension that is going to continue to rise. At the end of the day, the kind of, you know, nirvana for cheap termination is a central bank digital currency, right? If there's a real central bank digital currency that is ubiquitously accepted to spend, whether it's at a market or wherever, then basically you land the money in that consumer's CBDC wallet and you're done, right? But until then, you're landing the money somewhere that the consumer can have access to it. Traditional access is cash out over the counter. Terribly expensive, inconvenient, you know, as people either become more banked in a traditional bank account with some sort of digital access device, a card, or you know, a mobile wallet, which is effectively the same thing. You can land the money there and they can spend it, and it's easy. that's the continuum that I think we're going to continue, that we're operating in, from the traditional cash payout to landing in an account of one type or another, and down the road, if there's a ubiquitous, nationally sanctioned way to pay, landing the money there. And you're going to have a mix of those things over several years or decades. It's going to take a long time. But the fundamental point is that in Latin America, domestic systems were already pretty well developed. So it wasn't like other places where a good mobile wallet just came in and took over.
I agree 100%. I'll say two things. One, you definitely want to take time, because until you can do something with the money that you have in the wallet, I mean, you have to be able to spend it in, mom and pop regular retailers, which you cannot now. So you need on and off ramps for cash. So you end up in the same place. So it is a temporary depository of funds while you can go get cash and do what you used to do all the time. So I don't think that's the ultimate solution, but the ultimate solution will take much longer. And let's take the US. I mean, in the US, the very first way to send money digitally appeared, 20 years ago? Zoom, when Zoom started sending money to Latin America, that's 20 years ago, right? 20 years ago. So for 20 years, we have been hearing cash is going away, everything's going to be done through for 20 years. So, if you ask me, because obviously I'm biased because I'm in the retail remittance business mostly, what we have seen is about 1% of the remittance business to Latin America every single year moving from retail to digital. So in 20 years, you're in 20%. And right now it's probably 80-20, maybe higher, because pre-pandemic, I think that accelerated by 2 or 3-fold. So maybe it's not 20, maybe it's 25, close to 30. So let's say now it's 70-30 that funds to Latin America. Again, from the outside looking in, you may have different data like our Mexican president. But that's how we view it.
Please don't do that.
So what is going to happen going forward? I think it is probably going to be maybe 2 to 3% of retail to digital migration per year, which really gets you, let's say 50-50 in 10 years. But it is not, zero cash, 100% digital. I don't see that. If we would see that, we will not be investing in creating a network of agents and a network of stores. I mean, I think at the end is I come back to the multi-channel and serving the customer the way they want to be served. And customers may want to be served differently at different times for different needs.
But by the way, my numbers say 60-40, but I haven't checked with the president.
Yeah, I'm actually in pretty strong agreement with both of those points. I think, there is the retail adoption. So until there's retail adoption, the wallet is a nice thing, but it has no utility. And then there is the penetration of infrastructure, which I think is equally important. So, if you look at UPI in India, I think there's a reasonable argument to be made that really that was a government push. I'm not sure that system is profitable. The government is actually just really subsidizing and almost mandating it, because there's just banking deserts throughout India, right? I mean, the infrastructure isn't there. Even cash can't penetrate because it's just so remote from a banking center. And so that has a certain utility. UPI is bringing liquidity to, huge swaths of India. So that's the utility. So where I think we see banking deserts, we see more adoption of these alternative technologies. I think the government does have to play a pretty significant role in reducing the transaction costs associated with those and the barriers, and the costs of those technologies. But where the infrastructure is low, like Kenya and M-Pesa, I think they have a pretty significant role to play. But in some places, cash is coming back, right? Like I think during COVID, we love to talk about UPI and the adoption rate for UPI in India, but there are other countries where, cash is coming back since COVID. And so I don't think cash is going anywhere anytime soon.
Oh, and kind of complementing to that, cash, it's difficult to get to places, but a lot of institutions, and at least through Latin America, have figured out reach to access those very remote areas. Guatemala is one example. Financial institutions have been building correspondent networks to be able to deliver that cash, and they have kind of the system worked out. In Mexico, we own a network that's rural, cash payouts, and we're seeing that volume not being affected as maybe more urban areas where maybe we're starting to see more direct to account. So in theory, that would make sense, right? Where there's less financial availability, cash is difficult, expensive to handle, the digital will come in. But I think there will be a wave. And kind of coming back to some of the points that the colleagues made, I think that, yeah, the transition is going to take time, but there are some legacy players that are relevant in the market and are having those customers coming into their locations, whether it's a retailer or a bank, that are trying to figure out, because there is a possibility that that customer will open an account somewhere at some point in time, that they're taking pretty strong measures with product development to be able to say, fine, you want to collect in cash? Perfect. You want to collect in your account? We'll do that as well. You want to collect at a correspondent location near your town? You can do that as well. So giving them kind of the flexibility for the customer, for the beneficiary to choose. And then the question will always be, who determines where the transaction is sent? Is it the beneficiary telling the sender, send the money here? Or is it the actual sender saying, I'm going to send it to you there because that's the best option for me, less expensive, things like that. So that game is still going to be important.
There are two takeaways. One main takeaway is that the cash flow second issue is the different options available, that there will be different vehicles, even in the technology side. But you brought, Saima, you brought the word that we started talking about 20-something years ago, transaction cost. And you know, one of the interesting things that we have learned is that, first of all, when we started researching and providing data on this subject, we used to talk about the $200 transaction, because that was the average at the time that migrants were sending, $2,400 more or less a year. Now what we see is two very main differences. One is the principal sent has increased to $400. And the other one is that people are not sending monthly. They're sending even, you know, 16, 17 times a year. So in our research, we noticed that the so-called transaction cost has been dropping. This year, we just collected in January data, the unweighted average. It's 3.89% of $200. And it's lower with the actual average remitted. But there are people who talk about the cost of the commissions as junk fees. So any volunteers to tell me, you know, what does that mean?
You know, don't underestimate the power of a slogan, right? So, you know, you label something a junk fee and everybody says, oh, that's a horrible thing. The discussion that has been happening around FX markups and FX markups being, you know, a junk fee is really bizarre discussion. When you look at the FX markups that exist in the remittance market, they're less than you get if you use your Visa card or you use your MasterCard. You know, this is an extremely competitive market with extremely good disclosure, mandated by the CFPB, and you know, everybody better darn well, you know, pay attention to what those requirements are. But consumers are very well informed and in my view, well served. And you know, if one particular company has a business model where they, you know, prefer to, you know, not charge any FX markup and call everybody else, a junk fee, proponent. That's their call, but I think, well-informed regulators should see past that pretty quickly. I'd like to make one more comment about digital versus retail and just kind of lay out, what the difference is. In digital, in terms of the cost of acquiring a customer, it's marketing, right? That's the big cost is the marketing cost to acquire a customer, and you hope that the long-term lifetime value of that customer is greater than the cost of customer acquisition. In retail, that cost is basically replaced by agent commissions, which are the send agents that are marketing the service to the end user. So you want to see those dollars going to the big companies that are providing the online marketing channels, the Metas, the Googles, or you want to see those dollars going to Main Street to provide employment and provide a face-to-face interaction where customers have somebody that they can talk to, that they have recourse through. They don't have to battle with an app or battle with a call center to try to get recourse when there was a slight misspelling of the name and mom can't pick up the money. They go to the agent. And believe me, we listen when that agent calls, right? We're dealing with it because that agent represents 2,000, 3,000 transactions, and we want to make sure that that's power. That's power in the consumer's hands. So I think it's really important to understand kind of what the marginal economics are and where the money's being spent. Instead of marketing, it's spent in agent commissions. And that's a customer service function. And the other. Well, let me leave it there. I don't want to monopolize. So.
I think those are great points, Paul. I think on the junk fees, I agree 100%. It is, tell me one market, one currency exchange market anywhere in the world that doesn't have a spread between the buy and the sell. There isn't any. So, by definition, I think that remittance companies should be entitled to that spread as well. And then the only question is how much of a spread is reasonable, and that is determined by competition. That's it. And the CAPB disclosures, if you haven't seen them, they're hyper clear. You said exactly, you're sending $100, the Mexican peso is $18 per 18 pesos per dollar, and you're going to receive, 1,800 pesos. That's it. So it's very clear. It cannot be any more clear. So the reason why you cannot use a rate of reference is because every company buys with different habits. They buy at different times of the day. It's a market that is fluid. It changes by the minute. So it's impossible to have a reference rate. So, but again, everything is in the disclosure. And the other point on the pricing and the markup has to do with the channels. Different channels behave differently because they have different economics. So if we take as a point of reference where most of the transactions happen, which is in the agent model, the agent model will have a fee. Again, I'm just an example. Not everything is the same, but a fee of $10 to Mexico and an exchange rate that is going to be the most competitive of any channel. Why? Because those agents are non-exclusive. So they will have 3 or 4 or 5 different companies. And the only way that the companies have to differentiate is by having the best exchange rate. Why not the fee? Because the agent is not willing to sacrifice their fee. I want my fee, I want my 50%, I want my $5. So don't you dare lower the fee. So the only thing we can do is play with the exchange rate. But if we go to another retail channel in company stores, for example, in our company stores, we have different fee options. So you can send money for $5, for $3, even for $1. Obviously, those transactions are meant for lower principal sends, and they will have a spread that is more open. The markup, the FX spread is going to be more open, but it's also disclosed in the receipt. On the digital channel, the premise at the very beginning, and that was Zoom's premise, I'm not saying that's your premise, but that was Zoom's premise, it is how do we apply the agent commission to the discount of the fee? So if in agents you pay $10, okay, take the $5 of the agent away and you can send money online for $5. Now it's been 4 and up to 3. What happens in digital? That you have to open the spread to make up some revenue. Otherwise, you cannot cover the interchange and the fraud. So at the end, if you think about the different channels, you end up getting a reasonably good deal, but with very different mix of fee and exchange rate, depends on the economic of each channel.
This is my favorite topic. So, I mean, I think most of you may know this already, but it probably is important to start with saying what matters from a customer's perspective and a recipient's perspective is total yield to the recipient. That's what matters, is total yield. FX is used as a proxy, and I think in some cases, regulators are tethering to FX or fees because they're trying to figure out what is their best proxy to get to total yield. But the United Nations Development Program, the G20, the Financial Stability Board, and I think every serious student of development economics looks at total yield and take rate. And so the take rate and the take rate for global remittances has steadily come down over the last 10 years and is continuing to go down, right? So we started off like probably above 20, came down to around 9 about 10 years ago, 9% take rate. And now we're in the range of globally getting pretty close to that 3% target that the United Nations has set out. And there's a variety when we're talking about the PIXs and the UPIs, that's not an unrelated story, because the G20 and a lot of international governments are getting together through the Financial Stability Board and other means, the World Bank program, to create infrastructure to move us towards a 3% world, right? So there's an enormous amount of global coordination on the problem that the CFPB junk fees initiative is trying to solve, which is how do we make sure that money can move around the world in a way that spreads human prosperity, which is, I think, something we can all get behind, right? So that's the context that we're in, which is it's a little bit of a solution that's like, hey guys, like there is a whole world out there that's been working on this problem, which is how do we spread prosperity with more fairness? And actually there's a huge amount of progress there. We've, cut this take rate by half. And I think Remitly, as a Remitly, and I'm exceptionally proud of our role in that. I think the role of digital remittance providers has certainly addressed some of the transaction expenses, and delayering of the financial system globally has been, part of our core mission. And so we're really proud to be part of that story. So with that context, I would say, then getting to FX is the wrong proxy. The second issue is when you get into like a junk fees narrative, you get into this like markup to what? And then you're talking about a markup to some made up mid-market, which sometimes works great with very stable currency pairings. You can use a mid-market and it's not going to be like this. It's going to be basically the same all the time. It's a pretty stable currency pair. But what you see with mid-market rates is they don't really work in volatile currency pairings. And so, you take Pakistan in, December, or Ghana last year, where they had hyperinflation. At those times, if you're a remittance company, you can't break faith with your customer when there's hyperinflation in the destination country, right? If trust is part of your value proposition, how can you stop serving your customer when their family member is in a country where the price of bread is beyond the currency's ability to support, right? Like devaluation is rampant. They're desperate to send money into their country at that point. But if you're tethered to a mid-market can't move fast enough. So what you see is some of our competitors, when Ghana and Pakistan had their hyperinflation incidences, they had to suspend service because they couldn't really disclose a markup to mid-market. It just didn't work. The currency pairing was moving too quickly in Pakistan and Ghana at that time. So for us, where a huge part, the majority of our business is sending funds into developing countries, that's toxic, right? So it's a law of unintended consequences. Like this, their heart's in the right place, but I think they're dabbling with dangerous things that they need to make sure they understand fully the implications of.
That was a great response. And so I'll take a simpler kind of approach and just kind of look at the reality. So the service that's been provided by money transfer industry, it's one of the most efficient ways to move money globally. It's the most efficient, timely, I would say secure to get funds through. That with reducing, having a competitive environment and money transfer operators looking how to manage kind of their costs. I say kudos to the industry, because it's been it's something that banks have been trying to do and they're not doing it. So I think with that, but at the same time, there's strong investments that have to be done to the to move money from point A to point B. We discussed some of them already, but there's some in the background as well. They're constantly product development, compliance is key. You have to keep improving, want to meet the regulator needs, CFPB, but also the your own other state regulators. but also regulators at the destination as well. The transaction doesn't just go through and it's paid. So everybody's trying to be more efficient, but there has to be strong investments in compliance monitoring, real-time monitoring, historical reporting, and all that. So there are, costs are elevated for the money transfer operators and for the payers and companies like us that are processors. So I think we work, I think, as an industry to try to become competitive, but that in the end provides a better options for the senders, and then maybe more money, like you're saying, to the beneficiaries. So I think that's so it's kind of a challenging topic, but I think the industry as a whole has been moving in the right direction in that way with the burdens that it has.
And I should jump in to say, I do think the CFPB is hearing what we're saying. I do think they care about total yield. I think they will, they I think have moderated their position, at least recently from what I've seen, on the recognition that there's more complexity here.
There's more complexity and it's a competitive market. And when we actually look at the extent of competition, you can see it in terms of, how close to the average fee and the average FX are the top major money remitters. That tells you that, everybody is following supply and demand patterns. I'm going to open the panel to Q&A. I have one question from the audience relating to Cuba and Venezuela. Do you see any future, possibilities to entering in that market? Cuban migration increased 30% in the past 3 years. Venezuelan migration increased 100%. There 700,000 people came into the US in the past 3 years. 500,000 Cubans came, and both have a strong demand. Just talking about inflation, these are two countries where inflation is bread and butter, unfortunately. So, Gerardo,
I'll take it just because we tend to look at ourselves processors, payers on the payment side. So there's the clear challenges, right? Kind of the sanctions, and it's something that we've looked at. We try to open up some doors with example with OFAC. There was a time there that there was kind of a window trying to go into Cuba, try to figure out a way to kind of get things to work in an efficient way, as I mentioned, a secure way to get those funds. But I think that is kind of one of the primary challenges is if the openness to be able to work with those countries. There are some ways that people are looking at how to get access to Venezuela. There are some paths, but it's really kind of one of that decision that whenever you fill out your form for your bank, we have a bank relationship in the US, and you said you work with these countries and you check yes, you're checking it kind of shaky hand, right? So I think that is the bit of the challenge, because something that I do think clearly there's a need, even a humanitarian need to get those funds readily to those destinations. So I think, at least from our end, I'm not sure from them, we are looking at avenues to help get access. Unfortunately, I don't see it in the short term.
Same thing, and the key barrier, even if we get creative and we manage to transfer value, whatever crypto, store value, whatever way that we find to transfer value or they find to transfer value as a processor, the moment the banking system that you have in the US knows about it, that's the end of it. That is the end of it. Because you don't only have to convince yourself or your board, you have to convince every single bank that you work with that you're sending money to Venezuela, to Cuba. And the minute they know that, if they don't approve it, you're out of business. So no sending company is going to risk their banking relationship in the US for 1 or 2 corridors, as profitable as they may be.
I would agree with what's been said. These are very difficult markets from a U.S. sanctions perspective. And the U.S. sanctions regime is a strict liability regime. So the challenge with Venezuela is that the scope of the sanctions is so broad. It's a violation of U.S. law to transact with any employee of the Venezuelan government. That includes a janitor in a state-owned bank. That's a tough bar to overcome. There are reputable payers that are not state-owned that one can deal with. We are carefully looking at expanding service to Venezuela, not to Cuba. Cuba, is just it's such a political football. It just goes back and forth in terms of what's permissible and what's not. And to be candid, there is a very active informal market between the markets where a lot of money originates in the U.S. and the payout in Cuba. So you're dealing with with competition that's unregulated, that's that doesn't have the same kind of costs that a regulated entity has. So at least for V Americas, Cuba's not in the cards, Venezuela is.
Used it up, I guess. In Cuba, we look at these things frequently. We've come to the same conclusions that everyone else has, unfortunately, and it bothers me a lot. But the way the sanctions are constructed, the last time we checked, there are special licenses for humanitarian assistance, but it's still prohibited to send those to any organization that has any ties with the government. And every bank and financial institution in Cuba is connected with the government. And so like it's a special license without any practical ability to comply. And so interestingly, it's from what I understand, crypto is incredibly successful in Cuba. And we can't endorse or participate in anything that's not lawful in the US. But it's super interesting to watch. I mean, it's like a parallel market that's developed. I mean, it's like a incredibly interesting thought experiment, and the merchants accept it, right? In Cuba, merchants accept crypto. So it's just fascinating. It's like a really interesting market experiment that, we regretfully cannot participate in.
One of the most interesting things that I've seen in Venezuela, one of the popular ways to pay is Zelle. From Venezuelan to Venezuelan, Zelle. Okay, from funds in a U.S. bank account to funds in a U.S. bank account, but being done to pay for a retail transaction in Venezuela. So people will find a way, and so we're not, to all of the banks that might be listening, we're not participating in that, okay? But it's happening, right? People will find a way to do what they need to do.
That's trust. People behind the machine. Somebody has to trust that you download an app that has a U.S. bank account.
A follow-up question, because I think you are right. I mean, that from a legal access availability, it's hard to imagine that there will be tons of money flowing to Venezuela or Cuba via ordinary channels. But you said earlier, and I agree with you, people will find a way. So could you comment on what are those ways? Knowing precisely that there are so many Venezuelans and newly arrived Cubans who will want to send money. So what are going to be the channels? And I cannot resist to also comment on the crypto comment that you just made. I mean, my understanding is that crypto is extremely appealing, to countries with high levels of fluctuation in terms of currency, but that's not necessarily the case of even Mexico nowadays, which is much more stable. let alone some of the Central American countries that are also pretty high in terms of the remittances market. So I'll be curious to hear your comments as to what would you project the evolution of crypto, both in Cuba and Venezuela, maybe.
Sure. So maybe I'll go in order of your questions. I think unfortunately, the way the cash goes, and it is super hard to get money to, I think, Cuba and Venezuela now, but when it goes, I think it goes on human beings, who may have dual passports, who travel to somewhere like Europe, where it is permissible to travel to Cuba from. And so we're back in the Hawala system, right? With all of the problems that go with the Hawala system. And half the funds probably reach and half the funds probably don't. And of the half that reach, the person who's taking it takes whatever cut they want, which is certainly more than the 3 to 9%, that happens in the formal economy. So I mean, that is what I believe happens. I don't have the data. That's obviously not something that happens inside Remitly. So that's just sort of being an immigrant myself and sort of, I'm a little bit of a development junkie. So that's what, I think I'm pretty sure is happening. On crypto, I think this is my personal view. Crypto is not appropriate as a currency. I think that these are edge cases. Cuba and Venezuela are edge cases because the government has fully divorced their currency from a market system. And that divorce is so hard and complete that it's funny money inside their own economy. And people just can't, the crypto is actually the better option for them, not from a legal perspective, but from a monetary perspective. And they have no better option. I think almost everywhere else, even in a hyperinflationary economy, you're better off with the government currency because the full faith and credit of a government is standing behind it in some form. And in most countries, if no one can afford bread, the government steps in some fashion and says, okay, this is way too many people who can't afford bread, and does some kind of currency stabilization. The IMF or World Bank comes in and does some kind of currency stabilization. Whereas with a cryptocurrency, all that's standing behind it is the full faith and credit of whatever company issued that cryptocurrency. That is not a currency. That is some sort of a credit product, right? And so that's my view on it. There are very clever people who would disagree with me. So I think that I 100% agree. I don't expect that it would have adoption in a place like Mexico. It's not useful to a Mexican customer.
Thanks. I'm just going to add one thing. We've done a little bit of field work with Venezuelans. And what we find first is that the percent of adults sending money is very small because of the lack of intermediation. Those who do it mostly through individuals who go back and forth or through an existing bartering channel, the Hawala system. It somewhat functions well for what it needs to be done, which is delivering some money. But the challenge is going to be in the next 2 years, the United States, because the number of senders with purchasing power to remit are here. They're not in Chile. They're not in Colombia. They can only send $30 to their families in Colombia. But here you can afford to send $500. And so I think the push for it will be interesting given the electoral year in Venezuela. On crypto with Venezuela, you had Petro, the crypto stuff, but it's funny money. And in my experience, what I have seen is that the use as a remittance transfer is not that large. It doesn't amount to more than 10,000 transactions. We estimate about 2.5 million transactions so far of remittances to Venezuela. I mean, given the size of the migrant population, is a very small percentage.
Hi, it's Daniel Webber here, FX Intelligence. I know lots of friends. I just wanted to answer to the question on the volatility of crypto. So we ran this analysis in September 22, and I don't think it's too different. The only currency that was more volatile than either Bitcoin or Ethereum was the Seychelles rupee, and significantly more. So you were looking at the daily volatility of Ethereum was about nearly 7% a day changing value. Bitcoin 4 to 5%. And apart from the Seychelles rupee, which was in between that, the rest of the currencies, the Russian ruble, the Rwanda franc, the Ghanaian CD, the Brazilian real, the list goes on, was maybe 1 to 2% kind of range. So it's a bit of a myth that actually these currencies are even more volatile. They actually aren't. The cryptos are more volatile. So where you can't even use the currency, that's absolutely, and when you can't get the money out, those are use cases. But the volatility point is actually the data says it's a bit of a myth, although it has been a narrative. So just a little bit of data to answer that.
The issue also is with trust in the system and controls on the system. The reason money transfer companies exist, the reason the remittance industry exists, well, first of all, it was a failure of the banking system. Okay, the banking system just didn't work for person-to-person cross-border remittances. Just didn't work. And so companies arose to serve this market in a regulated environment where there's transparency, there's accountability, there is recourse for the consumer, there's AML controls, and one of the fundamental problems with crypto for cross-border transactions is that it's a pure peer-to-peer network solution where there isn't a licensed intermediary in the middle that can be held responsible to make sure that money isn't going to people that the U.S. and other governments say money shouldn't be going to. And until you solve that, I don't really know how you can scale a pure peer-to-peer thing. So I lose sleep over a lot of things. I don't lose any sleep over crypto disrupting the remittance market. And I'd like to make a broader point about what we're here to do and how we are succeeding and failing. I think the industry does a great job on the fundamental transaction of moving money from point to point, from country to country. But people have a whole economic life that we do not serve. Okay, if you're working in the United States, but your family's in Mexico or elsewhere, and you intend to retire there, can you contribute into your state pension fund from the United States? No, it's not easy to do. That's the kind of forward-looking product and development that I challenge the industry to really get into. You got to embrace the fact that your customers have a long-term economic set of economic needs beyond just the transactional bang of sending money. You kind of start to get to that with cross-border bill payment and other value-added services where you're doing more than a money transfer. But there's a great opportunity. What's the challenge? It's regulation. Okay, to get into selling securities. Can you imagine that? Like, cross-border sale of securities? Forget it. I mean, who wants to step into that minefield? But those are the types of needs that I think the industry should be looking at how it can serve, especially on long-term pension savings. I'd like to see a system created where, and it shouldn't be a Via Americas thing, it should be an industry thing where, people that are working in the US and want to check the box and have a portion of every remittance going to let that month qualify as, or that week qualify as a week where they contributed and counts towards their long-term goals, where they have a way to do that. Right? Within a national system, you can do that. You set it and forget it. It comes out of your paycheck, and that's the reason people say. But cross-border, we are just failing the consumers. The industry exists for one thing, cross-border money transfer, because there was a failure of the traditional financial infrastructure to do that. I think there are lots of opportunities to innovate, focusing on the consumer's long-term economic needs.
Thank you. We reached the end of this conversation. I want you to have final thoughts. Before that, there was a question or a comment and a reminder, all three packaged in one. Western Union is sending money to Venezuela. So, while I'm not gonna repeat the question that I was having, but, what's your excuse?
I have tremendous respect for Western Union and what they've built and the compliance infrastructure that they have and their position as the legacy leader in the industry. And I think it's a point of pride for them to serve every market on the globe that they can legally serve. And I'm glad they're doing that. And they, I'm sure are doing it very carefully. And it gives us a competitor to look at and emulate in some ways.
And what is the exchange rate at which they're sending the money versus the black market exchange rate? And how many people are using that service because of that reason?
It's a small number of transactions.
Look, I have a lot of respect for Western Union on that topic, and I agree with you. I think that there's a difference between Cuba and Venezuela, actually. Cuba is, to my mind, impossible. Venezuela is not impossible. It's just very, very, very hard. And so I think hats off to them. I think it's incredibly important that we have opportunities in the formal sector to serve all of these places. And, I also look up to them. I think they've had massive consent orders and they have a very long history. I don't know how many of you know, Western Union is like one of the oldest companies in America. It's been around, I think, since the 1800s. And so they just really have a depth of experience. They are not dilettantes. They're not cheap, but they're not dilettantes. And so I think we all in the industry learn from them, and because they've been through so many consent orders and they've made every mistake, they know how to be very precise, very careful. And they have a lot of infrastructure built in their global compliance network that I think the rest of us are all still building, but we don't dabble in Venezuela.
No, really not much to comment there. They have been pioneers, and I think a lot of folks have followed. And I think this is just another scenario that we'll have to do the same.
Yeah, I think they have a footprint, and I think it's worth to considering how to leverage from it. Many companies started to set footprint in the digital. Zoom 2007, more or less, that's when they started. And then came Western Union, then came Remitly and some other companies. So thank you very much. Thank you for being here and talking about these issues. There is more to come. We're starting the year, so we'll be in touch. Thank you very much.
Went through one.